After several punishing fire seasons, many Californians are facing cancellation from their insurance companies, citing reasons like proximity to brush. And what this really means is wildfire risk. So what are your options when you're facing cancellation? Well, A, you can go out to the market, find your local broker, talk to one of us, and say, let's see what's out there. And maybe you get lucky and find a company that's willing to take that risk on you. The next is what most brokers will do, because it's the easiest. And they take that and they go to surplus lines carriers like a Lloyd's of London and copy and paste your policy over. Now, this doesn't offer you consumer protections because they are not admitted with California Department of Insurance, nor are they backed so that if they go insolvent, you have no rights to your claim. And if you didn't feel that your claim was handled properly, you have no right to go after them for what you deserve and report a claim to the California Department of Insurance. And these are typically very expensive policies. So even though that's usually people's next step, it's probably not what you want. Now, the third option is what's called a DIC plan. This is when you have a high risk for, let's say, wildfire. And the California government will say, through our California Fair Plan, we will cover your highest risk. And once that is covered, you can get an insurance policy from any of the other carriers to cover the rest of the risks associated with your house. And so the two of those together can make a standard homeowners policy. Now, a lot of people don't go this way because you have to show that you have run out of options. The way you build a California Fair Plan is much more hands-on and difficult. And there's a huge range in the quality of DIC products. Some just add a few more risks on, and you actually aren't getting a true HO3 policy. And others are wonderful and actually go above and beyond a standard HO3 homeowners policy, like Stillwater, for example. They are willing to offer you replacement cost on the contents of your house, higher liability limits, higher home dwelling limits, and even added features like equipment breakdown, because they know they can offer you a good product if your major risk is covered. This is a much more hands-on process, and sometimes the cost is high and it's comparable to a surplus line, but you are offered protection this way, and you are able to adjudicate and report a claim against them if they don't fulfill your claim properly. And if they go insolvent, at least you are backed and you will get a piece of your claim. So even if the price is comparable or a little bit more, the benefits of these programs far outweigh going to surplus line, which should always be your last resort. So if you got canceled or you're worried about being canceled, come talk to us and we will find a solution for you.